To build anything that truly lasts, it takes time.
Of stocks will be in focus this morning, and we already have operational updates that have started trickling in. So which are the stocks that will be in focus? Abhishek is now joining us with all the details. Abhishek, over to you.
OPEC has agreed to increase oil production by over 5,48,000 BPD by August. This is higher than the street's expectations. Obviously, this would have a negative impact on the crude oil prices, and given that generally the fall in the oil prices augurs well for the refiners, while it would have a negative impact on the upstream companies. So this is a directionally positive for HPCL, BPCL, and a directionally negative for the players like ONGC. Second is on the FMCG players like GCPL. So GCPL has announced its Q1 updates. In its updates, it is expecting double-digit kind of a growth in its revenue, largely led by the high single-digit growth in its volumes. Further, except its soap portfolio, most of its portfolio performed well in Q1. Further, the company has also maintained its FY26 guidance, in which earlier it has indicated that in FY26 it is looking for a high single-digit kind of a growth in the revenue with a double-digit kind of a growth in the EBITDA. So it's directionally positive for GCPL. Third is that again an FMCG player, Dabur, which has reported its Q1 update. So largely because of most of its portfolio have performed well in Q1 except the beverage segment. Beverage segment was impacted because of the short summer and the early rain. In a previous quarter also the beverage segment reported a 9% kind of a decline. So this would be the consecutive second quarter when beverage segment will report muted performance. Backed by this muted performance in the beverage segment, the company is expecting a low single-digit kind of a growth in its revenue in Q1, while the EBITDA growth would lag the revenue growth. So considering that the muted performance in a beverage segment, which has contributed roughly 17% to its revenue in FY25. The improvement in the beverage segment is critical if companies aiming for a high single-digit kind of volume growth or volume growth in the coming years. This is directionally negative for Dabur.
In focus are chemical stocks, an important paper coming in from Niti Aayog, and they have stated that they are expecting a net zero India trade balance in chemicals by 2030. Also, the target set for this year is a 5 to 6% production share in the global value chain. Now, the OPEC subsidy, that's roughly 65,000 crore rupees expected in the system for the next 5 years. Now, the relevance of this Niti Aayog paper is that they have taken a lot of submission from the ecosystem players, and this will be submitted to Parliament as well. This may lead to India's first PLI scheme for chemicals as well. We might see a re-rating in the sector. Also, Oriental Trimex, it's in focus. The company is a marble processor, and important positive news flow coming in for the company is that they are planning to divest land assets and a small granite unit in Odisha to reduce their expenses and streamline their operations. Also, they are expected to commence their quarry operations for black granite as well, and recently they have introduced that ultra thin wire machine for cutting blocks as well. So important positive commentary for the stock. And lastly, ET Now Impact, Dream Folk Services, and we had stated earlier that there are issues in the company, especially on the business model, and we had already stated that there must be institutional selling coming in, and now we can see Bajaj Finance offloading roughly 3 lakh shares, Motilal Oswal Mutual Fund also 2.7 lakh shares, and a private investor, HRTI Private, exiting the company.
Let me start with IndusInd Bank, because the operational update given by the company, the provisional update given by the company is actually weak, wherein the net advances have declined by around 3.9%, and it's a multi-year low when the overall net advances have shown a decline. If you look at the breakup, the corporate banking advances, they have declined by around 14.4%, and also the consumer business have actually increased by 4.8%. So actually it's the corporate banking which has shown a sharp decline. The deposits, they have also declined 0.3%. on a year-on-year basis. The CASA ratio has also shown a decline, and now it stands at around 31.5%. So the operational update by IndusInd Bank is weak, but remember, in last 2-3 days, we have seen many of the broking houses actually downgrading IndusInd Bank. Tata Power, the company has given the update during its AGM, when the company has shared the most anticipated opening up of the nuclear sector for the private participation. Also, the company has given update. The company actually transitioned to be a direct consumer facing company with its rooftop solar and EV charging solution, and also the company has said that a 4.3 gigawatt solar cell and module manufacturing facility at Tamil Nadu has been commissioned and actually stabilized during the year. Cochin Shipyard, the company has given an update that the company has signed a MOU with HD Korea Shipbuilding to actually collaborate on the new building project and enhance shipbuilding capabilities. And lastly, it is Jubilant Food Works. They have given their quarterly updates. They are almost in line, wherein the provisional revenues are up by around 17% on a year-on-year basis, and the standalone revenues are up by around 18.2% on a year-on-year basis. The like-to-like sales for Domino's India is around 11.6% this quarter versus 12.1% in the previous quarter, and for Domino's Turkey, it has actually gone down by around 2.2%.